that was formed. I just want you guys to pay attention because sometimes people ask me, well, how long will banks hold positions? For as long as they find it valuable. They won't pull trades unless there's a reason to. This zone was formed all the way back in 2010, October of 2010. And then it was hit once, pushed out, twice, pushed out, 3 times pushed out, and this is just recently have been hit the 4th time pushed out. Isn't that crazy? So that's a 14-year demand zone that's still holding, has not been broken because wicks don't break zones. Can everyone see that? Give me a yes or like if you see how every time I come back in to this green area of institutional demand, I get rejected because there's an imbalance in order flow, more buyers and sellers, so it keeps getting pushed back out and pushed back out and pushed back out. Cool. If you don't see the patterns, fair enough, man. Just keep watching and you'll learn more about it. It does take some time to learn this. You got to think, guys, I've been trading 27 years, so sometimes I do stuff and people are like, you make it look so easy. It's like, well, I haven't done it a long time. It's like, it's not something I just started doing yesterday, so. Absolutely easy, yo. All right. So we have our monthly levels down here. I have institutional selling, impulse, balance, impulse. Think about what this means in terms of price action, guys. I just want you to think about what does this represent? Sellers were in control, pushing price action down, right? Clearly, sellers were in control. Suddenly, they met this area of hesitation, and for a brief period of time, buyers were buying, sellers were selling, and price was not moving. Consolidation, small body basing candles, balance in the market, right? That's balance in the market, equal numbers of buyers and sellers. But eventually, there were so many more sell orders than buy orders here that every single buyer was exhausted and all we had, or eliminated, and all we had left was a big pile of unfilled sell orders. And if you have more sellers than buyers, what happens again? Price goes down. So do you see the structure? Impulse, balance, impulse. If you have a hard time thinking about this mathematically speaking, think about it from this perspective. Here I am State Street. I decide I want to short sell 20 million shares of Intel at $30 a share. What's up, user? How you doing, brother? Right, I decide I want to short sell 20 million shares of Intel at $30 a share. Just because State Street wants to short sell 20 million shares at 20 million shares at $30 a share, does that mean there's going to be 20 million buyers sitting there waiting for them? Time spent does matter to us, user. No one aspect of an analysis ever eliminates a zone in its entirety, but the more time I spend in a zone, the weaker the imbalance, right? No, that's pretty unlikely, right? I mean, Intel does have a decent amount of daily volume. It's about 95 million, but still, the idea that 1/5 of all volume would be sitting at one limit price, that's very unlikely, right? So what ends up happening is they fill some of their order, right, based on what's available in the market. So let's just go back to this example. State Street wanted to sell 20 million shares. They placed this limit order into the market to sell 20 million shares. When they place the order into the market, there are 10 million buyers available at that limit price. So how much of their order can State Street fill? 10 million. You can't buy more than what's available. You can't sell more than what's available. For every buyer, there must be a seller. For every seller, there must be a buyer, right? So there's only 10 million buyers available at this limit price of $30. So what does State Street do in this circumstance? Well, they fill as much of their order as they can. That's what they do. They say, okay, I wanted 20 million. There's only 10 million available. Give me the 10 million. And they grab every available buyer. Every buyer that is available here at the limit price of $30, State Street grabs for itself. Now, when they do that, what have they just really created in terms of order flow in the market? They've just created a sudden and dramatic imbalance. Yeah, man, if you want to learn more about it, brother, I'm teaching a workshop next Thursday. You can register on our website, tradephantoms.com. So it's free. If you want to learn more about trading at a professional level from people who actually worked in the industry, you can register right on our website, tradephantoms.com. All right? Yeah, I can check it out, Rick. Sorry, just let me keep going. So whatever, the 20 million shares, they only filled half their order. And now what is State Street left with? Well, they're left with the rest of their order, right? They have 10 million unfilled sell orders sitting here. And if I have 10 million sell orders, 0 buyers left, right? Every available buyer they took. What does that cause price to do? More sellers and buyers, price goes down. More importantly, what does that leave State Street with? Well, it leaves them with those 10 million unfilled orders. Now, is State Street going to cancel their order because they couldn't fill the full order? That's the important question. Will State Street say, oh, well, we only filled half our order. I guess that's all it is. And do they cancel the rest of the order? What's their reaction to that? No, why would they cancel it? Right? If State Street was position sizing out to sell 20 million shares, they're position sizing out to buy 20 million shares. That's not a random number. That's a calculated number. That's a specific number that is of value to them, right? So barring some dramatic fundamental change, there is no reason for State Street to cancel their order because nothing that happened is surprising to them, right? Is State Street surprised that they couldn't fill their full order at once? No, that's the norm. That's the norm for banks. It normally takes them months, years to fill their order. So that's not a shock. They filled some of their order, price shot away. That's exactly what they do. But they leave those unfilled orders there because if price comes back in, they'll fill more of their order. And more importantly, what else will they do? They will control price movement in the market. The same reason we have this demand zone that's been here since 2010, where they've been driving price action up, driving price action up, driving price action up, and more recently, driving price action up. This is how they control price action in the market. They place major levels of institutional buying and selling at certain levels, and they drive price action back and forth and back and forth and back and forth until they fill all orders, at which point that's when you see zones get broken. Is everybody with me on that? Does that make sense to everyone? What's actually happening there? If you understand order flow and what's actually driving movement in the markets make a lot more sense in terms of how they move. I have no idea, Pill. Last week was a little bit weird for me, man, because I was a little bit busy because I had all this stuff to get done before I traveled. How is that not market manipulation? Well, now, so like market manipulation is considered stuff like this. What's up, Saucy? If you go and you say, like, let's say you're State Street, right? State Street is one of the largest investment firms in the world, controls trillions of dollars. And then you go and you call up Vanguard and you say, Vanguard, hey, let's go buy Intel together. You put 100 million in, I'll put 100 million in. That's manipulation, right? What's another form of manipulation? If you are purposefully pumping up the price to dump it, like doing a pump and dump, that is also market manipulation and legal. But they're allowed to trade, right? They're investment firms. They're not prohibited from trading just because they have more capital. They're not prohibited from being able to take positions. And so if you want to know how they justify positions when they take positions in terms of the market, I can speak to how my firm would, which is we would have specific entries and targets before we got into the trade. So if on the off chance that, let's say, the SEC came around knocking at your door, you could be like, this was a planned trade. We had planned entry here at the limit price of 21.34. We felt we could drive price action up and take it to make profit on this trade, and we would sell at the limit price of $30. You get what I'm saying? Like, it's a planned trade. So they can't claim manipulation when you had it planned out ahead of time because you just went according to your plan. The same way any single person in the world can go and invest. You can say, hey, I want to buy some Microsoft. I think Microsoft's a good company. And then I'm going to take my profit if it goes up and sell. And there's nothing illegal about that. It's an interesting gray area but they have enough money to move the market. That is true. They have enough money to move the market. And such is the way the world works. You know, some people have more money, some people have less. But that's why professionals follow what the major institutions do. We're not going to try and trade against them. They're the ones who have the money to move the market. Right? Oh, I'm all good, brother. You're good. Cool. We can check out gold, Riyadh. Let me just finish here on this one, then we can check out gold. All right? All right, cool. Let's keep going. Absolutely, Rugby. And also, like, is there a possibility that they're doing other stuff? Dude, they've been caught so many times. It's a funny thing because people ask me that all the time. Like, I worked in a major investment firm. I worked in one of the top 3 investment firms. So, like, you're talking a company that has literally trillions of dollars. And people would ask me, like, did you ever see them doing anything illegal? Not even once. Like, quite the contrary. They were super, I don't know if paranoid's the right word, but super strict about compliance. Like, very, very strict about it. So now what they did behind closed doors, I can tell you, I've seen articles about them getting caught manipulating markets and things like nature. And even when they are caught, guys, at the end of the day, what happens to them? They get a fine. It's a slap on the wrist. And they make so much more money that they definitely do it. They definitely engage in it. They've been caught doing it. But at the same time, is it the majority of what they're doing? I would say probably not, because they don't need to. You know, it's kind of like, imagine you're the casino and then you load the dice. It's like, Have casinos been caught loading dice? Yes. Is it a common thing? I mean, dude, it's already in their favor. Like, it's already so beneficial to them that it's like, why kill the golden goose? But they do it. They do it, and they get caught, and they get the fine, and they go, oh, sorry, my bad, I'll never do it again. And then they're back doing it again the next year. So it's like, does it exist? Yeah, it exists. And that's why I always say to people, like, why bother fighting? Like, dude, if you can't beat them, join them. You can't beat them. They have way too much money. They are in everything. Like, try and find a Fortune 500 company that doesn't have BlackRock or Vanguard or State Street or UBS have a controlling interest. Try and find one. Find one Fortune 500 company that doesn't have it. Like, good luck. Because they control them all. They control them all. You know, and like, people forget how government works. How does government work? Well, corporate lobbyists go and give money to politicians to pass laws that benefit the corporations. That's how government works. That is what government is. And sometimes they think about the citizens and people as well. From time to time. From time to time we come along and they're like, oh, I guess, yeah, maybe we should help the citizens. But most things... Most of it's about like, man, how can we help out poor Elon Musk? This poor guy, he almost had to pay taxes last year. Thank God we managed to get him out of that. Yeah, oh, 100%, dude. And if you start looking at it, if you really want to get into it, and then BlackRock owns part of Vanguard, and Vanguard owns part of State Street, and State Street owns part of BlackRock and Vanguard, and UBS owns part of State Street. Like, they all own each other. So it's like, it's this big, massive, convoluted pie that is like, good luck trying to sort out who's really in control there, because I don't know. I can't figure it out. There was some guy, it's actually really interesting. If you guys Google it, you might be able to find it. There was a guy where he legitimately tried to track all the connections between all the major investment firms and the corporations they control to see if he could get down a rabbit trail. And dude, when you see his chart, I don't know if you guys have ever seen it. He did post it on like social media at one point, but when you see his actual chart at the end, it's insane, dude. I don't remember, dude. I just remember seeing it a while back, Sebastian. I thought it was fascinating. You saw? Oh, so maybe it's the same guy, Saucy. Yeah. Absolutely. All right. So anyway, institutional buying, institutional selling. Let's drill down to the weeklies because that's our next step. So we're on the monthlies. We're going to drill down to the weeklies. What I'm looking for on my intermediate time frame is I'm looking for two things. I'm looking for trend and I'm looking for correlating structure. Trend and correlating structure, right? I do trade Forex. I don't. What I trade the most, A-Town, is I trade mostly Forex and options day to day. I'm primarily a swing trader, so I prefer to take directional positions. So like my Forex trades, I'll usually be in Forex trades from anywhere from a couple days, like 2 to 5 days, something like that. So I'll trade it every day, you know, but my average duration of trades, like once they're triggered, is anywhere from 2 to 5 days. For options, a little bit longer, like usually either a couple days up to a couple weeks is typically what I have in terms of duration. So I'm always like looking at the charts because new things will be set up every day, right? So I'm always looking at the charts every day. I go through my watch list. I go through all 28 currency pairs. I find any potential new setups. I set them up as potential trades, but that doesn't mean they're going to be triggered right away. Sometimes they'll be triggered in a couple days, sometimes in a couple weeks, sometimes in a couple months. But my actual duration once they are triggered is anywhere from a couple days to a couple weeks. Does that make sense? What broker do I use? So I actually still have an employee account from when I worked at the investment firm Vision. So I still use that primarily for my equities trading, so like stock and options. For Forex, I have Forex.com, and I also have an Awanda account, but I primarily use Forex.com, not because I think it's better, just because I've had it longer. So it's like I saw no reason to switch over. Most of our members use Awanda. You can check out Dollar Yen. I would imagine that investment firms use more sophisticated algos than retail tech analysis too. So that's an interesting question, Sebastian. So people kind of misunderstand how algorithms are used by investment firms. What algorithms do, first of all, just so you understand, companies, investment firms have dozens, if not hundreds of different algos. Because there is no one algo that rules them all, so to speak, right? There's no Lord of the Rings algo. Different market conditions dictate different types of algorithms. What algorithms are used for by investment firms is to do something that us human beings are incapable of, which is high frequency trading, right? Like you or I, no matter how good an analyst you are and how quick your clicker finger is, we cannot click a button millions of times per second, right? But there is no such thing as somebody comes into the investment firm and says, turn on the money-making machine, and then somebody switches on an algo, and that just trades for them automatically with no input from traders. And that, I think there exists that fallacy out there because there are a lot of people on the internet that propagate that lie, right? Like, what's his name? The ICT guy. Like, he's like, I develop algo. First of all, I doubt that guy developed, because dude, like, you understand, like, we had a whole coding team in the firm. Why in the world would they go to some YouTube pretend trader? You know, it's just stupid. Even the statement is dumb, but whatever, putting that to the side. But there is no, like, magic money-making box that they come in and turn on the money-making box in the morning. You're like, turn on the money-making box, and then it just trades for you. That's not the way it works. What they have is they have tons of different algorithms. They have analysts analyze the charts, and then these analysts go and say, based on these very specific market conditions, this is the correct algorithm for us to use in these parameters. They set the parameters for the algorithm. I want you to trade in this manner from this time to this time, from this price to this price, and I want you to execute high-frequency trading in it. And what the algo will do is it will execute millions of transactions per second. In, out, in, out, in, out. Does that make sense? That's how they use algos. So there is still always an analyst overseeing it. I have yet to see a single firm that doesn't do that, because you got to think, if you only traded having an algo try to make decisions for you, what would that do to the market? Like, just think about this from a practical circumstance. If you had algos make all the decisions to the market, would that change market conditions? Would the market start to react differently? They would start to react differently, right? If the market starts to react differently, then what do you have to do? Change the algo. But then you change the algo, and then the market starts to react differently. And they have to change the algo. And then it starts to react differently. And then you change the algo, and then it starts to react. You get what I'm saying? It's self-perpetuating. It's going to keep going. It's never going to end. So that's not the way they use algorithms. They use algorithms to do something that... Now, can they have algorithms that might find potential trades or find sector rotation? 100%. Oh, absolutely. I'm not saying they won't use it to their benefit to find potential trades, but there's always human overseers. Now, if they ever got to a point where they could get rid of humans, dude, I'm sure they'd love to pay less. Because if you actually trade for a firm, that's one of the highest paying jobs in the world, guys, right? That's when you get paid really well. Because you got to think, if you know how to trade, it's really hard to keep someone that knows how to trade in a job that's a 9-to-5 job. You're like, that's a tough job. Like, imagine you know how to trade effectively, and you can make, and I don't want, well, whatever, I'm not saying me. So let's say you make 7 figures a year, multiple 7 figures a year trading, right? Do you need to work a 9-to-5 anymore? Or let me put it differently. Are you interested in working a 9-to-5 anymore? Is that something you're like, man, I just love clocking in and clocking out for the man? No, most are not. There are exceptions. I have some friends that are very successful traders that to this day still work at hedge funds. But it's because they like the lifestyle. It's like they like the environment. They have fun. They think it's fun. They think it's like being in a big frat, and I will put it this way. Every single one I have that does that is single. So it gives you some insight into their personality profiles. I don't think it's ego. I think they enjoy it. I genuinely have friends that enjoy it, dude. Like one of my good friends. Yeah, exactly, Alice. One of my good friends, like that lifestyle of I used to live in Brazil. He would fly down, him and the owner of the hedge fund, like the two of them were like besties. They would fly down to Brazil for the weekend. So, get the private jet, fly down to Brazil, fly on Friday night, get there Friday. They Friday night, get there Monday, I guess Saturday morning. They would party insanely for 2 days, and then they fly back for Monday morning work. And they did it more often than you would think. You guys are more often than you would think. Not a normal amount of time where you're like, one time we did that. No. You're talking maybe once or twice a month. And like he would message me and be like, "Hey, I'm here again." I'm like, "You're here again? Why you were just here? Why are you here again?" He's like, "I just thought it'd be fun to hop down." And I'm like, "Dude, it's weird, man. It's a little weird." But okay. Glad to have you. And I love him. He's a good friend of mine. He's a fun, super fun guy. Like if you want to have a good time out, going out, can't have more fun than with him. But it's just like it's not a lifestyle that for me is what I wanted, you know. So some people really are like really love that lifestyle, and you know I can't knock if that's what you're passionate about. That's what you're passionate about, you know. To each their own, I suppose. For me, I always looked at trading as like I just wanted to not be beholden to a job. I just wanted to be financially independent. That's really what I wanted to do. That's a risky question, man. Uh, I'll say this quite. If you are a wealthy hedge fund successful trader visiting Brazil for a weekend, you'll have a good time. Wealthy single hedge fund trader. You'll probably have a good time in Brazil for a weekend. Yes, legacy. They'll let you trade for your own, but they won't typically let you trade your account during office hours. So, like where I worked, I could not touch my account during office hours. Now, I never worked for a hedge fund. I worked for a major investment firm, right? I worked for one of the top 3 investment firms in the world. So they were a little bit more corporate because they're huge. You know, like imagine like working for BlackRock. BlackRock's not like it's not like the Wolf of Wall Street. You know how you'll see like the Wolf of Wall Street and they're, you know, tossing midgets around. So like that's not there was nothing like that where I worked. It was corporate. It was you have to wear Brooks Brothers or Armani suits. You have to wear watches that are worth at least $5,000 more. These are the shoe brands you can wear. These are the shirt brands you can wear. You have to be clean shaven. Like it was a very different environment, you know. Now, maybe at the highest level, I mean, you got to think, even in my most senior position, I was still way down on the totem pole. I was a good performer in my position. Like I was one of the top performers in my branch, but I was one of many employees. You know, I was never the senior vice president or something like that. So, you know, different levels. But, you know, maybe at those levels. No throwing. No, there's none of that. Zero throwing in my experience. Oh, Cassie, that's a little more complex. I mean, let's keep doing our analysis. Sorry, we went down rabbit trails here. Let's keep doing our analysis here, and I'll show you more about how I analyze the charts. So here I am on the weeklies for Intel. And the first thing I want to evaluate on my intermediate time frame is what is my trend? What is my trend here? Is this an uptrend, a downtrend, or a sideways moving trend? Really, Sebastian? That's crazy, dude. Oh no, they were so strict when I worked there. It was so strict. You could only you could do bespoke suits, but if you did a bespoke suit, you had to get it approved. It wasn't like, you know, because you know how like some people are more, I don't know, fashionistas or something, and they say I'm gonna make this, you know, I don't know, green velvet suit made by this English tailor. They cost $10,000. They're like, I don't care. That's not aligning with the look of the company. Like, so it wasn't like it wasn't carte blanche. Like you had to get it approved, and they had a specific look. I remember you couldn't have a beard, which is funny because nowadays you can have a beard. But when I worked there, you were not allowed to have a beard. You're not allowed to have facial hair, period. You could not have a mustache. You could not have a goatee. You could not have a beard. You couldn't have anything like that. Because it was viewed back then, like they'd done some sort of study in the 1970s or 80s that said that people trust people with facial hair less than they do clean-shaven people. I don't know why, but that's just the nature of it. Yeah, we broke control. We haven't established an uptrend because even though I have broken control here, right? I've broken past this controlling lower high. I haven't established a new trend since we've reversed past it. So I've broken the downtrend, right? Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. I candle close past my controlling lower high, ending that downtrend because you can have a downtrend with a higher high. But since it's ended, all I've had is an impulse. So I'm currently non-directional. Yeah, 100% Alex. Yeah, it was very strict. It was very strict. SpongeBob sucked. Yeah, different time, Sebastian. You know, to be fair, man, I've been trading 27 years, so like my world is different than it is now. You know, like I grew up in a very different world. It wasn't at all politically correct. That I can tell you. Like, political correctness and all that stuff, and being sensitive to people's feelings. That did not exist on the trading floor at all. The trading floor was more like, if you don't have thick skin, you would not survive very long on the trading floor. Because people won't say like, oh, maybe that wasn't the best trading decision. Next time, try and check it out this way. That was not the type of feedback you got. Feedback was not like, hey man, I understand why you did that, but that's probably not the best way to do it. Try and take this apart. Like, that wasn't the type of, it wasn't like constructive criticism to help you improve. It was more like, what are you, a dumbass? Like, and I'm still toning it down. Like, it was a bit, let's just say it was more aggressive. Feedback was aggressive, and if you did not adapt quickly, you were out. There was no like, oh, pity party, let's help this guy get up and let's raise him up. They didn't care. They're like, you can't do it? Tough, someone else will. On to the next person. Like, there was no sympathy for failure. Does that make sense? Like, there was no sympathy for failure. They did not care. That's a whole lot of your problem, not their problem. They're there to make money, and if you don't know how to do it, tough shit. Go somewhere else, So it was a more cutthroat, and I don't know if that's really changed. I haven't worked, for a firm in a long time, so some places I still hear it's very similar. Some places I hear it's more toned down. It's hard to say. Yeah, sink or swim. Absolutely, man. Absolutely. Kaiser Soze? Dude, I just watched that movie with my daughter for the first time in a long time. Because I made a list of movies for her to watch. And that was one of the movies I'm like, oh, this is a movie you should see, And so we watched it together, and she was like, that's good. And then the end, when you get that twist, and it's coming, she didn't know, and she was like, oh my God, that was so good. I'm like, it's a great movie. There's a reason it's famous. Yeah, she loved it, man. She loved it. Well, let's finish here with Intel, then we can check out some other ones. All right, so we're non-directional, which means we have no bias. Now, what do I have to look for? Same thing I'm always looking for, guys. I have to look where the banks and institutions are buying and selling. I have to look for order flow. Do I have any clear institutional order flow here on Intel? Well, I have this pivot reversal right here. Impulse, because a gap is an impulse, right? So I have an impulse, balance, impulse, pivot reversal. I have an area of institutional selling right here. Some big bank or financial institution sold heavily here on Intel, driving price action down. Now, this is the question that matters. When they sold here, Kaiser Soze, but yeah, close enough. When they sold here, did they fill all their sell orders? Were all of their orders filled when they sold here, guys? No, they couldn't have, right? Now, why do I know that? Why do I know they couldn't have filled all their orders? Because if they'd filled all of their orders, price would not have exploded downwards. It would have continued to consolidate and move sideways. But that's not what we have here. What we have is impulse. What I have is impulse, balance, impulse. So think about it again in terms of price action. Buyers were in control, pushing price action up. They met this wall of sell orders. And for a brief period of time, buyers were buying, sellers were selling, and price was not moving. Small body basing candles. But eventually, there were so many more sell orders than buy orders here that every single buyer was exhausted, and all we had left was a huge pile of sell orders. And if I have an imbalance in order flow, more sellers than buyers, what does that cause price to do? More sellers than buyers causes the price to go down. Always and forever. If I have a large imbalance in order flow, way more sellers than buyers, it causes price to go down impulsively, as we can see right here, indicating a strong imbalance in order flow. Everybody with me on that? Not only that, but this is also what? That is weekly, monthly correlation. Zones on top of zones. And do we like zones on top of zones, guys? How do we feel about zones on top of zones? We love them, right? We love zones on top of zones. Why? Because they form stronger levels of imbalance. If I have multiple banks or institutions selling at or near the same price point, the area in which their order blocks overlap each other, this darker area in which the two zones are overlapping, this is why I keep my zones semi-transparent, are going to form stronger levels of imbalance. Right now I have even more unfilled orders sitting in this overlap. It's like a Venn diagram of unfilled orders, so it forms a stronger level of imbalance. On the buy side, do I have order flow? Well, I have this pivot reversal. Drop, base, rally, beautiful pivot reversal, area of institutional buying. The only thing I need to go check on this is to make sure it's not a retest of a previous level over to the left. So I'm going to scroll to the left to make sure it's not a retest, which it very well may be considering that the zone has been hit multiple times. I mean, kinda, sorta, right? I mean, this level is so broad and it's already been hit so many times that is it technically a retest? Well, the whole zone is a retest, right? And we didn't break the zone. So it's still a retest, but it is a brand new level formed within that zone. And not only that, but we have this nice little gap here. What type of gap is that, guys? Yes, Sebastian. We'll talk about that. We can talk about that in a moment. Absolutely. You should always be aware of the economic calendar. You should be aware of fundamentals. I don't make trading decisions off fundamentals, but you absolutely need to be aware of it. It's a breakaway. That's a breakaway gap. Nice, strong inmounts, beautiful level inmounts. It costs a lot of money to drive price action. No, fair value gaps aren't really an industry term. I'm sorry, I'm trying to read your name, man. Lulu. That's actually just a retail trader thing. That's not a real thing. That's just what a fake trader pretends is a thing. I don't know how else to put it. Like, somebody who doesn't actually trade who made up a term. It's like, this is a fair value gap. And it's like, first of all, what the hell is a fair value gap? He just made up a random word. He trades on the impulse, but he decided to name it fair value. I don't even know where he came up with that. The name doesn't make sense to me. So I don't know where he came up with it, honestly. Like, I don't understand even the verbiage behind the words that he came up with. I'm like, what are you trying to say with fair value? Like, I don't get what he's trying to even say. Fair value, because it's not a gap. And what do you mean by fair value? Like, none of it makes sense to me. I think, but you know what it did for him? It means that if you go and Google this term that he completely made up, who are you going to find? Only him, because it's not a real term. It's kind of like, imagine